Buddy, how's everybody? Good. Folks at the door, come on in. Bring your friends. We're going to get started. Did I scare you away? Come on back in. You might learn something. We'll just give it a minute and the people are coming in and sitting down. Thank you. So I'd like to first thank DirLabas for having me here. My name is Paul Oehm. I'm from Ontario, Canada, near Toronto. I live about an hour away from Toronto. Just to give you a little story, a little background of myself, that you know who I am. I'm a 56-year-old, what I would call a serial entrepreneur. Since age 21, I've been building full-time companies. Even as a young kid, my father, I had the greatest teacher. How many people heard my story in my talk yesterday? So not even half. So I'll just give you a couple minutes, just my background. So I grew up on a farm about 2 hours from Toronto in Canada. My father was a farmer. He had a farm supply store and a hardware store. So as a young age, I learned from my father great things. He was a very smart entrepreneur. I started when I was 7 years old. He had 6,000 laying hens producing eggs every day. I started picking eggs by hand at 7 years old. Not because I had to, because I wanted to. And I learned at a young age work ethic and responsibility. By the time I was 9, I learned the power of delegation and subcontracting. I would hire my buddies to pick the eggs for about 3/4 of what I was paid. I didn't go goof off with my time. I went and worked with my father in his store, learned more things from him. One thing I learned in his store, he sold bicycles and repaired bicycles. So I'd buy old bikes and turn them into really cool choppers and sell them to my buddies. And then I also would pick new worms, night crawlers, fish worms for fishing out of the garden, the neighbor's garden, and sell them. So at 9, I had 4 little business gigs on the go. By the time I was 18, I actually dropped out of high school. School bored me. I did go back, but I had several businesses, house painting businesses, hiring my buddies, renting farms, raising cattle, and I bought and sold probably 30 motorcycles, cars, and trucks by the time I was 18 years old. Went off to college for a couple years. The only time I worked for somebody in my whole life, when I was 19, 20, I worked for a large corporate feed and grain company. I only worked for them for 10 months. And at the end of 10 months, they actually offered me the sales or the manager's job of a multi-million-dollar grain elevator, fertilizer plant, feed mill. And I thought, if I'm going to work that hard, I'm going to do my own gig. So fast forward, that picture, my story yesterday, what I would tell my 25-year-old self. I started my first feed and grain company when I was 21. I ran that company for 9 years. In 1990, I started a road construction company. I ran that for 23 years and sold that. In 1990, I started a parts distribution company, and I ran that for 13 years. That was an e-com company before the internet. I basically scaled that through classified ads in newspapers and construction magazines, and we distributed these parts all over Canada with the courier trucks. People would call a 1-800 number call with their order, and we'd ship things out to them. In 2000, I started a pool, hot tub and purified water business. I ran that 11 years and sold that. And then in 2015, I started an e-commerce company. We built a brand, and I sold that this past year. So the Biz Coach, which is my new business, what I decided to do, there's a real need for entrepreneurs in general, is to how do all the components and run a successful company. You know, there's a lot of sales and marketing things out there today, but with what I do, it's all the components from strategy, sales and marketing, operations, systems, people in numbers. So I basically teach people how to automate their businesses to scale, that it's not tied to the individuals. And that's the only way you can truly scale and actually sell a company. Nobody wants to buy a business from an individual. They want an automated company that makes money to get any kind of valuation for a company. So it's an online course, we can talk about that. So my talk today is knowing your numbers. Does anybody, I don't know over here if you get the reality TV show The Prophet in America? So this Marcus Lemonis, what he does, it's a TV show, reality TV show, as he is a very successful businessman. He actually goes out and finds troubled companies, invests in them, and helps fix them. And a quote from him, if you don't know your numbers, you don't know your business. Because any business, doesn't matter if it's an e-com, a drop ship, a brick and mortar business, it revolves around dollars, which is numbers. If you don't have profit, you don't understand your numbers, you don't understand your business. So that's what I want to talk about today. I have a bunch of formal things, but first of all, I would like to ask, put it out to you guys, because I'm here to serve you, of what your needs are when it comes to numbers, and I can maybe fast forward into the presentation or skip a few things of what you guys really need and want to understand. And then also what I want to cover today, plant a seed, is I have some really cool what-if calculators, and I have one on an e-com based company where I can predict, I know exactly with your numbers, your costs, your margins, how many orders you need to break even a day, or any profitability things. And a what if you change anything, it'll tell you before you can make financial decisions. So I want to pick on somebody, hopefully, to bring their numbers, and we can plug that in a minute. So when we have a speaker, I'd like to put it out and just ask a few things, what kind of numbers, and I'll get into details here, what people would like to learn today that I can serve you better. Don't be afraid. What would you like to learn today? And I will fast forward into certain things about the numbers. Any particular things?
Actually, we want to have a general idea about how we can control our finances. Because you know, the problem.
Should we get him a mic here? Does this one work? Hello? Here you go.
Thank you. Hello, my name is Mehdi. I would like to thank you for your presentation. What you've said is really interesting, especially for beginners. Actually, the majority here are beginners, including me. So we would like to know the metrics to take in consideration in order not to fail in our business. Personally, I have a cash on delivery business. The main problem I have is a financial problem, you know, because there are certain times where we have some peaks, and we hire people, we do some stuff. It's like we get engaged with high charges based on that period of peak of sales and stuff, and then when it drops, we simply find ourselves in trouble, you know. So what are...
Seasonalization you're talking?
Kind of.
And then you're adding fixed costs
Yeah.
for the peaks, and then how do you get rid of those fixed costs or those costs in a slower period of time?
Yeah, because the peaks, the problem we had before is that we based our costs on the peaks, you know, because we get excited about new things that are yet to come, and then we find ourselves in some serious trouble. So how can we predict?
I have the perfect thing for you. Okay, I understand that. That's one of the biggest problems when it comes to numbers and finances. When companies start scaling, they add costs, they add people, they add rent an office, whatever, too quickly. They start adding costs without predicting them, without forecasting out, okay, I add this cost, how much more do I have to sell, or what if sales drop, what's it gonna do to the bottom line? And I have a gift for you, a break-even calculator, but I have one on steroids that I want to go through, and that's what I more want to focus on, the practical side, than a bunch of theory here today that'll answer your question. Anything else before I get started? You want to pass the mic down?
Yeah, I was just gonna mention a theory called it's actually one of the theories that the only one I think that I was amazed on finance is because I'm not a finance guy, I'm just a marketing guy. So it was like the profit first formula, and it consists on how you can actually make several bank accounts for your business in order to maintain a certain positive cash flow all the way up when it comes to gain like certain prevent certain like a lack of cash flow when you need it. So my question is, I am more interested in this theory, and I want to know if you have like any accounting hacks to make it like to make a positive cash flow every time, and to predict when you're gonna need the money at the right time.
Yeah, excellent question. That's one of the biggest problems. Statistically, over 90% of businesses, small businesses, and I classify a small business under $10 million in sales, from 0 to 10 million. And over 90% go out of business within 10 years because they have cash flow problems, they're not making profit. Everybody gets so caught up in the top line, how many dollars in sales we're doing. That don't matter. What matters is what's left over, the profit. And not enough people, I think today, they look at top line growth, which is important, but you have to make money. It ends up, there's one number, knowing your numbers is the most important thing, is your profit and your positive cash flow. And people start making profit, but then they spend too much on capital items or anything else, and they run out of cash. Or draw money out of that company for seasonalization changes, and they don't have the cash to pay their bills when things get a little tough. You gotta always have a little extra cash in your back pocket, because everything does go up and down in cycles. Another question, then I'll get through it, and I'm gonna bring more questions or thoughts. Right here, there's another question.
Thank you first.
You're welcome.
What I want to ask is about when you have an e-commerce business and you do the logistics and fulfillment yourself. So you find yourself with an offline accountability and online accountability or charges. They don't have. You have charges online and charges offline, but you don't have the numbers at the same speed because online charges and costs and advertisements, you can have the sheets.
So knowing your cost of running your own fulfillment center versus what you can outsource that, is that your question?
It's not quite that. It's about the accountability of the offline accountability of the offline charges. So
the cost of running your own fulfillment center.
Yes.
And I have that covered. So when we get to the e-commerce break-even calculator, I have in there if you're outsourcing to a 3PL, third-party logistics, or putting your own costs in that are going to bring you right back to pick, pack, and ship cost per order on the front end and how it can affect break-even. You're going to like this. Okay. I think I'll answer that question. One more thing anybody wants to know, and then we'll kind of dive into this thing. This is about you. I don't want to be up here preaching. I want to give you guys what you need.
Hi. It's not about accounting or something, but I would like to know, when you have a business where it's your face, how to say it, like for me, my business is, people contact me because of me, you know, and I want to scale it, but I don't want to work more and more and more. So you have a strategy or something to sell it's your brand, it's your business, but you cannot, how do you say it in English? Delegate.
Delegate?
You cannot delegate because it's your face.
Yeah.
You have a strategy for this.
That's what my boot camp, my online course is all about. So it's all the components of a successful business, but what I really teach people to do is how to automate the operations, the systems and procedures within a business. So you bring the people in, they run the systems. So you can step back, work on your business to make money, and then somebody is going to be lining up to buy that company when you sell it because it's not tied to you. You're not doing all the doings. You're working on the business, not in the business. And that's literally the end result that I do with what I'm doing today. I've gone through this stuff, not that I have all the answers, but I have a lot of experience. I've had a shitload of kicks in the ass that I've learned from, made mistakes, had a lot of success as well. And that's how I've been able to sell my 5 companies, because they were systemized. They weren't tied to me. Some of my employees didn't even have a clue who I was. They knew who the managers were in some of the companies. They just ran and made money, and then you have people lined up to buy those companies. Okay. We lost this. I talked too much. So it boils down to numbers. First of all, I want to tell everybody I am not an accountant. I don't profess to be an accountant, but I understand money and I understand numbers. When I was back to my dad, when I was 12 years old, I knew the difference between markup and gross margin. Does everybody, and I have a slide here, understand the difference between markup and gross margin? Put your hand up if you understand the difference between markup and gross margin. So very few. So we'll go to that slide so I can really, that's one of the biggest things you have to understand. There's a huge difference between the two. But what I really preach and tell people you have to have is scorecards, dashboards, KPIs. Because business is numbers. And you have to monitor these things every day, every week. It's like driving a car without knowing how fast you're going, how much gas is in the tank, and each business, and we'll go through some of the important numbers. You have to build these scorecards and monitor them. Same thing when you're building and scaling a business. You build these scorecards for your different employees. From the janitor, how many times did he clean the bathroom, to the graphic designer with the efficiencies, or the guy doing digital ads. It's a performance. So you know by looking at a scorecard what the score is, and then you can change your strategy, your management strategy within the business. Because if you don't have your eyes on the numbers, you don't have a clue what's going on, because every business, it boils down to dollars and numbers. Conversion rates, cost per order, lifetime values, profitability, all those things. So you have to build scoreboards and dashboards and monitor them every day, every week. And bring your team that they understand these. That's one of the biggest problems when it comes to employees. When you start building a team, you have to communicate that. They have to know what they're responsible for, and this is their accountability. So you don't have to micromanage. You give them a responsibility. You have that meeting once a week, once a day. Hey, how's your scoreboard? Did you meet the score or not? If you didn't, let's talk about it. Why not? What do we need to improve? So every aspect you have to do that. So the numbers tell the story of the business. You need to understand the biggest thing that you have to understand in any business is the profit and loss. Forget about the top line. Yes, that's important, but if you're not making money, that's the only way you keep paying your bills, is when you have money in a bank account. You can't keep burning cash. Some startups, it takes money to get it going. I understand that. I've been there and done that. Cash flow. So again, net profit is not necessarily positive cash flow. You can make money, make $1,000, but if you spend $1,500, you're in a negative cash flow. That's a simple cash flow statement right there. I make $1,000, I spend $1,500 on something stupid, I'm in a negative cash flow. You have to keep money and have a little bit in your back pocket. There again, some of this is boring stuff, but understand your balance sheet. Understand what you own. So the two of those, and in my boot camp, I get into details, and I'm not going to bore you because I think I get into the calculators here. That's going to be the practical stuff that you guys can really learn from today. Statements, they tell you the health of the business. A balance sheet, by looking at a balance sheet, it gives you the health. Maybe you're making a bunch of money, but you owe so much money. You know, current versus long-term liabilities and assets. Everything's measured in numbers. Like I said, knowing your numbers is like driving a car. You got to have the navigation, the gas gauge, the speedometer. You go to a sporting event, if you don't have a scoreboard, you don't know how much time's left in the game, what the score is, you change your strategy to that. That's, if I can drill one thing into everybody's head today, build scorecards that are relevant to your business that you can keep top of it today. And it's back to profitability is one of the main things. A lot of people say, oh, I have a bookkeeper, I have an accountant. Back in Canada, basically all that accountant's job is, in most cases, is at the end of the year, he makes sure your accounts are balanced, he sends it into the government to pay your income tax. That's accounting. You have a bookkeeper to make sure your credit card accounts are balanced, your PayPal accounts are balanced, everything's balanced, right? What you need to understand, accounting is a snapshot of the past, is financial management is your scorecards. What's happening today in the business? And understanding the important numbers that move the radar to make a difference in scaling a company profitably and making money. So numbers you need to know: profit, bottom line, cash flow, gross margin. I'm going to show you the difference between gross margin and markup, which is very important. Break-even point, my calculators that you'll see. How many people know the break-even point of your business today? How many dollars in sales you need to have every day or every month or every week? Stick your hand up. So 3 or 4 people in the room know their break-even. I'm going to give you guys a tool at the end of this, if you're out there, for free. It's going to blow you away, that you can put your dollars and cents in today, you know your break-even, and then a what if I change. So it's based on, we'll get into in a minute, your top-line sales, your gross margin, and your fixed costs. It tells you your break-even point and your profitability. And then a what if I change? What if I hire somebody? How many more dollars in sales do I need at this margin to break even or to make money on that? So you can make financial decisions before you put the money on the line. You gotta know your break-even point. Simple things, average order value. I have another calculator I'm gonna go through quickly on lifetime value. They talked about that this morning. You know, just selling a commodity once, it's not a sustainable business. If you can build some kind of brand loyalty, keep these customers coming back time after time, selling to them for a little higher price, selling them, upselling them, instead of a $75 order, selling them a $90 order, and keep them coming back more often, you have more effects on your bottom line than growing on the top line, getting your growth from that, and it doesn't cost you money to acquire those customers. Keeping those customers, they'll give you more profit. That's the most profitable way to build profit within a company. Back to lifetime value. Knowing your marketing cost per lead, marketing cost per order, percentage of sales. How many people, dropship you don't have, how many people house their own inventory here on a product-based business? Anybody? 1, 2. So most are drop shipped. If you have your own inventory, it can kill you. You need to turn your inventory over quickly and profitably. If you have dead stock on the shelf, if you have too many months, it eats your cash up, you pay for this inventory, it wrecks a lot of businesses. And in my boot camp, again, I have a simple spreadsheet on inventory turns. You have to turn your inventory. Turn it as fast as you can. I had my parts distribution company in the 90s. We had 1,800, no, we had just about 2,400 different parts. We turned that inventory 18 times a year. We were lucky, our supplier, we had our parts fulfilled within 2 days. So if you're bringing it from overseas, sometimes you can't do that if it's a month or 2 or 3 months out. And predicting inventory sales and flow and turnover can make a huge difference. You can be making money, but as some of you may know, if you have too much inventory and it's not turning, it'll kill your cash flow immediately. And that's why a lot of people go to the dropship model, because they don't have inventory, they don't understand the logistics of inventory and the management of inventory. But if you do it correctly, a lot of times you can make a lot higher margin with your own inventory than a dropship as well. Depends on the deal. Budgets and projections, I'm big on that, is projecting the future. Back to what you were saying, knowing your numbers. If you're going to grow or seasonalization, you can plug it into a cash flow projection. You know, like in North America, Q4 that we're into now. A lot of people do half their business in Q4. You can't build a lot of fixed costs around that. You may have to contract, so you can plug that into a cash flow projection, especially if you have some historical data, so you can project what that's going to do if you know your numbers, and then off season to preserve that cash, not that you make it all in one quarter and lose it all in the other 2 or 3. So, and in my boot camp, again, advertising that. I give you budgets, I give you cash flow Excel, things that you can plug your own numbers into to understand that stuff. Balance sheets, we're not gonna, so profit and loss, simple, and I'm gonna buzz through this stuff quick. What do you make? You sold 750,000. Our total costs were 650. We made 100,000 bucks, a 13% bottom line net profit, positive cash flow. Simple stuff. I'm just going to kind of buzz through some of this stuff, cash flow. There's a prime example. We started with $50,000 in our bank. We had sales of 650, operating expenses of 650, so we had an ending cash position of 150,000 bucks. We're in a positive cash flow position. Here's the same scenario, and this is where people get in trouble. We started with 50,000 at the start of the year, same sales as 750. Our expenses 650, but the owner took a loan out. He took, hey, we're making money, we got all this cash now. He took 125,000 out of the company. He's only left with 25,000. He had the seasonal thing. Hey, we got all this money, and then all of a sudden, in 2 months, we had to buy a bunch of inventory, or we had some expense, or a downturn in business. We run out of cash. So by projecting that ahead, you can predict those things, right? You got to always kind of look in the future, is know your numbers today, and have a. You never know. Nobody has a crystal ball, but it's always good to have a little extra cash in your back pocket. Don't pull it all out of the company. Those are some more complex. Okay, the difference between gross margin and markup. We won't bore you with that. Simple. We have a product, we sell it for 100 bucks. It costs us $60. Our profit is 40 bucks. We have a 40% gross margin. You take how many dollars you make on it, divide it by the selling price. That's true gross margin, and when you do a P&L statement, that's what you plug in, that's what you analyze. Gross margin is left to pay the fixed expenses. And a lot of people don't do it. I've set up a chart of accounts different than a lot of people. Everything to do with that sale should be built into your cost for gross margin. So if you're a product-based business, not just the cost of your product, your credit card fees, your pick, pack, and ship fees, any cost associated with the sale of that item should be figured into your true gross margin. So think of it, the only time I spend this money if I'm selling the product. A fixed cost is something I'm spending, doesn't matter if I sell 0 or 1 million widgets. So rent, internet fees. Marketing is a fixed expense. We can adjust it on the fly with digital today, but if we spend $1,000 on a Facebook ad, there's no guarantee we're going to get any sales. So it's an actual fixed cost, not a variable cost, in my explanation. So we'll go back to the difference. So markup. So that same widget costs us $60. We're marking it up by 40%. A lot of people think a 40% gross margin and 40% markup's the same. It's not, and this is where I'll show you. So we mark it up by 40%. So the selling price is $84, not $100. Everybody see that? 40% markup, product cost is the same. You sell it at 84, costs us 60. We made $24 on that item. Our gross margin was only 28%, not 40%. And when you're figuring out your P&L statement, it's on gross margin, not on markup. So you only have a 28% gross margin. Any questions on that? It's very important to understand the difference between gross margin and markup. Okay, the markup. So that product, so going back here on the gross margin, just to clarify again, so we sell that product at 100 bucks. It costs us $60. So we have $40 left over after so that 40 divided by 100 is a 40% gross margin. So here, that same product costs us $60. We put a 40% markup on it. So we multiply that 60 by 1.4, 40% markup. So we sell it for $84. So we made, instead of the $40, we made $24 on that. So you divide the 24 by the selling price to get the gross margin. So it's only a 28% gross margin on a 40% markup. Very important, because your P&L statements are based on gross margin, not on markup. A lot of people think, oh, I got a 40% profit margin. No, you have a 40% markup. This is a really important thing to understand when you're marking up and figuring out your true gross margin on things. Any other questions on that? Do you understand that? Break-even point. So I think I'll bring out the one calculator here in a second to show you a real example. But to figure that out, your fixed costs, so a fixed cost in a business is everything that you spend, a wage, your management wage, your internet cost, rent, insurance, bank charges, things that you pay no matter if you have one sale or a million sales. So you take your fixed costs, whatever that number is, a month, a day, a year, so on a yearly basis, if your fixed costs are $250,000 and you're running your business on a 40% gross margin, then your break even is $625,000. So you need $625,000 sales a year at a 40% gross margin to break even, just to cover your costs and no profit. So I'm going to change the screen here for a second and show you real life examples and how this is where it gets fun. So in this example, this is the calculator that I'll give everybody a download for free at the end of the thing. So in this example, and I can put any numbers in here. If somebody wants to give me their numbers, I can plug them in. So in this example here, this business is doing $500,000 in sales a year. Okay? The gross margin is a 50% gross margin, and we can put whatever. You can put your own numbers in here. But in this example, $500,000 in top line revenue at a 50% gross margin. Their fixed costs are $175,000 a year. The break even, they have to sell $350,000 to break even, to make no profit. But in this case, at $500,000 in sales, at a 50% gross margin, with fixed costs of $175,000, they make $75,000 a year. Does everybody understand that? Yes? This is where it gets fun, and that's one thing I get excited about in helping my students. Little changes make a big difference. One thing I do, and you can change anything you want, I call it the 3 5s. I'll explain this before I put the numbers in here. By lowering your fixed costs by 5%, raising your gross margin by 5%, and raising your profit by 5%, how much difference do you think that'll make in this $500,000 business to the bottom line? Anybody want to guess before we do it? Yes. How much difference in profit do you think it's going to make from 75,000? What do you think that, just those few little changes? 30%. Okay, we'll do it, and I'll show you how quick this is. It's really cool. So if we lower the fixed costs by 5%, so it's 95%, and there's no business I can go into that we can't lower your fixed costs. People get complacent. They don't negotiate with suppliers or your insurance or your rent or your phone bill, negotiate a better price. So here, just by lowering your fixed cost by 5%, it takes your profit from $75,000 to $83,000 a year. an increase of 11%. Lowers your break even to 332. Our gross margin, we increase it by 5%, and there's a lot of things you can do, not just raise the price of products to increase your gross margin. Look what it just did. Now from $75,000 to $109,000 bottom line, it lowered our break even down to $300,000 in sales. We raise our sales just by 5%. So we take our sales from $500,000 to $525,000. Look at what the bottom line has done. We've almost doubled the bottom line of this business from 75 to 122,000. We've increased it 63%, an extra 50 grand of cash that goes in your pocket. So with this calculator, you can start predicting before you put in an expense. So for instance, I'll do an example here. We'll bring these back all to 100. For an example, how many people provide a service to another company? How many people are, say, a digital agency here? So we have perfect example. I have customers that are digital agencies that use this. So your service, what would you charge an average customer a month for your service? So on a, say, a dollar figure, $1,000 a month? 1,000 would be an average figure? Would that be for anybody else? So if it's $1,000 a month, that's $12,000 a year, okay? So you go up here, so we're at, you got to play with it a little bit. That's 14, so about 1,075. Where's the decimal place on here, Des? 5. So that's 13,000. So what I did here, so as a selling feature for you, how to use this calculator, the fixed cost, because that's a fixed cost, you're charging them if they sell little or none, from 175 to 188. So this works out, you can play with this, but you're charging them $13,000 a year for your service. So without any extra sales, their profit drops to 13,000 bucks. But what the power is now, you can show them what they need to increase their sales just to cover your costs. So we'll do that first. So at a 50% gross margin company, that's probably 105. That's real close there. So just to break even now, they have to increase their sales per year by only $25,000. But you're saying, you know what, I know how to do this. Instead of this, I'm going to blow your sales up 30%. So, boom. So you increase your sales by 30%, they go from 5 to 650, even with your added cost in here, boom, you changed their bottom line from 75,000 to 136. You've increased their profit by $61,000. So as a business owner making a decision, if you're hiring somebody, hiring an agency, you can put that cost in this thing before you spend the money. How much do I have to sell at this margin to justify that cost before you put the money on the line? If I can get this much more, that's generally you want to invest in something that's going to give you a return, right? So you can see what that can do. Does everybody like this? Any questions on this? Yes, I'm going to give everybody gets a copy of this spreadsheet. I'm going to show you one. I think where I'm going to go now, I'm just going to buzz through if there's any other questions. Then we're going to play with these interactive spreadsheets to show the power at answering a lot of the other questions. So we talked about break-even point. What happened here? Where did my screen go? Is there a computer guy here? I'm a Mac guy. Our PowerPoint disappeared. How come it's not opening up? I'm used to a Mac, and this is in French too. So I had to borrow an IBM computer here. It's on the drive there, on the C drive, everything was there and it all disappeared. If it's on there too, I've seen the. It doesn't need to be. It's on. Everything's on there. If you go to calculator, yeah, and the PowerPoint is know your numbers, right there. And I need to bring a spreadsheet back up. Do we have the guy with the computer? Is he handy? There we go. I'm going to skip ahead. I don't know if I can skip down here. So we're doing the margin, the break even, and I want to get to these other calculators. I think you'll learn more from there. It's important to look at, I'll go through this quick and then I have calculators for that as well, is looking at average order value. So important in margin with there. So a simple way on a macro level, take your gross sales in a month, divide by how many orders. If you're on a Shopify store or something like that, it tells you that automatically, right? But it's always good to know how you come up with that if you're on a different platform. By increasing average order value, a lot of the speakers have been talked about that, upselling, cross-selling, huge, and it comes back to lifetime value. And I have a calculator for that. So if you have a product or a service to keep people coming back, not just it's a one-off. You can afford to spend more money to get those people and to know the value, what they're worth to your business. And by selling a little bit more often, a lot of times you can make a higher margin if they keep coming back. Dramatic effect, and I have a calculator that will show that within a minute as well. So I'm not going to bore you with all this stuff. That's how to calculate it. I have a calculator to show you that in a spreadsheet. Has a dramatic effect, and I can show you how to double your bottom line by just getting your customers to buy a little bit more when they buy and a couple more times, and maybe adjust your margin. Can double your bottom line like that instead of worrying about chasing new customers all the time. Everybody is so worried about getting new customers all the time. If you look after your customers, in my talk yesterday, looking after your customers, exceeding your customers' expectations, giving them a great product and great service and keep them coming back will add more value to your bottom line. And if you're looking at selling a business down the road, that's when it's really worth something. Customer list, a profitable customer list with huge lifetime value of the customers. There again, you guys probably know this stuff, marketing cost per lead, marketing cost per order. You got to know this stuff. And on your platform, your Google Analytics, your Facebook, it tells you that stuff. And to monitor that and make sure you're getting the right return on your ad spend. Killing ads if they're not. I don't need to talk about marketing stuff. You guys probably know that stuff. Simple thing, if you're looking at cost per lead, depends on your business model. If you're bringing leads in, say, in a business like mine, my goal, I want to get people on the phone and talk to them. Then I can convert them. It's worth bringing them in. Then you have a sales funnel to get them versus just selling a product online. So take your spend. How many people leads? You know your cost per lead. You know, different forms of advertising. So if your digital spend is $2,500 on a certain platform, divide by how many, tells you your cost per lead, bring it in. Basic math, and a lot of the platforms will tell you those costs today. Conversion rates, there again, all you guys are probably on top of those things, important. And converting those, and these are in the calculators. Marketing cost per new customer, and when you know your lifetime value, then you know what you can invest to get a customer. And sometimes it's worth more to bring a customer in or maybe sell the first order at a loss or a break even because you know your customer is going to keep coming back and you know the value, and I'll show you that in the calculator in a minute. This is where you make money. You know, I hear so many people, I tried dropship. I'm not knocking dropship, but the margins are low. It's a one-off. If you can build a product, if it's a dropship or a brand or whatever, or a service-based digital product, keep people coming back. That's how you can make money and sustain it and then have a business that's going to carry on for a long period of time or have a business to sell. There again, these calculations are in the calculator. I'm not going to bore. This is more in the course. So I think I'm going to go right to the calculator. If there's anything else in here. Just on inventory turns, there's only a few people here with inventory. You have to look at your cost of your unsold inventory. All the basis, how long is it sitting around for, which affects cash flow. So a little spreadsheet you get in my thing. Not going to bore you with the details, but by monitoring your inventory, knowing how much you're using on a month. So like in this example, we had a cost at the start of the month, $25,000. We did $68,000 in sales. Our gross margin was $40,000. So for those sales, we had this much inventory. So we didn't bring any in, so our turn was 1-1. You want this turn, you want to turn this inventory over and understand inventory turns. You can't have, it'll kill you. I looked at a customer of mine, she's making a ton of money. She's making $500,000 a year on paper. She has 3 stores and sells some stuff online, but she's built her inventory to $1.2 million. Her inventory cost a year on those sales she's doing is $750,000. Her inventory turns suck. All her profit's sitting in this dead inventory. And that's really the only time, in my opinion, to put things on sale is to dump old dead inventory, because that dead stuff that doesn't sell, things go out of style, out of stock, you can't, it'll kill you if you're an inventory-based business. And that's why a lot of people go to dropship, that they don't have to have inventory. But you can make a lot more money having your own stock a lot of times, buying more, better negotiation power, you have control of it, you have your own brand, but you got to turn the inventory. We talked a little bit about this, and back to planning, that gentleman's gone. Budgeting, projections, knowing the future, predicting the future a little bit with your current numbers. Knowing the difference, we talked, your marketing cost is a fixed cost, but everything you spend to your marketing. Variable costs should be everything that is involved in selling your product. When you sell a product, you have a cost. So your credit card charge, your product charge, any delivery charge. You're not going to pay delivery unless you sell a product. All that should be calculated in to come up with your true gross margin. So your fixed costs, balance sheets. I'm not going to bore you with this stuff. So just a couple questions that I ask people, and then I'm going to get into these calculators. I think that's where you're really going to learn here. So are your financials up to date on a monthly basis? So important to know where you're at. Make sure, how many people do their accounting on the computer or have a bookkeeper that keeps their accounting up to date on a monthly basis? 1, nobody else? 2, 3, it's so important to keep your accounts up to date, reconciled to your credit card, your bank statements on a monthly basis. If you don't do that, you don't know where the hell you are. Am I making money? I'm losing money. You can't go by the balance in your bank account. Keep your books up to date, balanced, and reconciled at least on a monthly basis. If you don't understand the bookkeeping, if you're no good at it, hire a bookkeeper. This will be some of the best money that you can spend, is on a bookkeeper to keep your accounting up to date, reconciled, and balanced. And you know that's your heartbeat of your business, is your P&L. Do you know your break even? Everybody's going to, because I'm going to give you a calculator to do that at the end of this. You need to know before you make any decision, spend any money, what is the break even of my business? Why would you go into a business if I'm going to have X number of costs, I know whatever margin, to know what you have to sell before you even, if on a startup? Okay, then I know I have to sell X number of product at this margin to make a profit. Or if I'm going to scale, I'm going to have to invest in ABC to know before you do that what I have to sell to make a profit. Because if you don't make a profit, you go out of business. Over 90% of small businesses go out of business because they run out of money, because they don't know this stuff. I know it's boring. People laugh. They don't like numbers. It scares them. Or maybe they know it. Whatever. You have to know your numbers. You have to know this stuff if you want to be successful. There again, do you track your gross margin on a continuous basis? You may have a broad product line. A lot of times, 80% of your profit will come from 20% of your sales or your items. The old 80-20 rule works all over the place. It's knowing your different margins and your different product lines if you have different product lines. Concentrate on your profitable product lines and the volume of those. Eliminate the stuff that isn't making money, that's costing you money. How do you track your business's performance? How often? Back to scorecards. You got to have scoreboards, scorecards, KPIs that you know every day, every week where you're at. That's the only way you can change your management strategy from where you are to where you want to take this business, of monitoring the performance. It's like going to a soccer game, knowing how much time's left in the game, and know what the score is, and the teams adjust their game strategy if they're ahead or behind for how much time's in the game. No different in business. How often do you look at little things in your business as a manager? That's one of the biggest challenges small business owners make, is they get so busy working in their business, they don't come up and start working on their business as a manager and look at those little things. In that original break-even calculator, those little changes, 5% change in fixed costs, 5% change in sales, not 50, 50 is great, but 5% change in margin literally doubles your bottom line. And the larger business you have, it affects it on a more compounding level. You start getting into 7 figures, 8 figures, 1% change in margin can dramatically change your bottom line of a business. And keeping on top of the little things. Looking at invoices, there's horror stories of businesses, I've seen it myself. People just send companies invoices. There's so many scammers out there, and if your bookkeeper's not on top, they just plug it in and pay it. That happens all the time. So you got to have checks and balances in your business to look at things like that. So you're not just paying them, or an automatic, a thing that gets a lot of people, they start buying a subscription-based app or service. I'll guarantee everybody in this room probably has some app on their phone or some subscription base for 10 or 20 or 30 bucks a month they're not even using, and you're still paying for it. We're all guilty of it, right? I see my head shaking. Those are the little things, and you get 2 or 3 of those at 30 bucks, all of a sudden it's $2,000 or $3,000 or $5,000 a year. That's money that you're giving somebody you don't need to. Negotiating on courier fees. I know back in Canada, the courier companies will charge X. You play hardball with them, especially when you start getting volume or as you scale and increase. You have power to negotiate, and you can get a better deal. Or you go to company A and company B and say, let's tender this out, especially as you start scaling. Give me a price, you give me a price. And look at the service. Okay, you're cheaper, so it keeps them sharp and not changing the price on you. So we'll get into that. I'll tell you that later. I'm going to get these calculators up and show you this for an e-com. May need, there's that one. Okay. That's the lifetime value. I don't know if anybody wants to give me an example. I have an example in here. If anybody wants to give me their items. So this, figuring gross margin. So in this calculator, we break down every component of the business. So in this, we're selling a product for 75 bucks. It costs us $35. Okay? I'll make this a little smaller so we can see the whole screen. So on the margin side, we're selling it at 75. It's up here. It costs us 35. We have a credit card charge of 225. So our total cost is 37 bucks. In here, say if you're a manufacturer, whatever, this has the power you can put in your raw cost, your waste, your hydro, your materials. None of you are probably a manufacturer here, are you? No? If you were, you can figure out your true gross margin with this formula, or if you're just buying a product. So you know at the end of the day, we have $37.75 of gross margin, or 50%. Okay? Then we're going to go to pick, pack, and ship. So in this case, this is like a drop ship model, and you can put whatever your numbers are in here. If there's any questions, stop me, because I want you to understand this. So in this case, I'm using some North American numbers. We have our product in a 3PL center. Maybe your drop ship guy charges you $1.50 per order to pick it and pack it, and the courier is $6. In this example, we're doing 250 orders a month. You'll see that in the front end. So it's costing us $1,875 a month. And a lot of those 3PL centers will charge you a technology fee of $500 a month to integrate API everything in. So in this example of 250 orders of that a month, our total cost is $23.75, so it's costing us $9.50 an order to get it out the door from a 3PL center. And you can adjust your costs when you get this calculator, whatever you want. Your marketing costs. So here you can do, and we'll do some what ifs you're going to love. So this here, you know your marketing costs $8 an order. And you can put, if it's $2, if it's $80, you can plug in there. 250 orders, so we're spending $2,000 a month of marketing costs. To figure it out in this scenario, we can do a what if. You can get rid of that. You can put in what you're spending on Facebook or Google or whatever, an agency figure. It'll total that up, divide it by your orders. It'll give you your marketing cost per order for that month. Okay, so you can put all kinds of variations within this formula. Everybody understand that? Your fixed costs. So here for easy form, I put in $10,000, but you can put your own costs into this. So what are you spending on administration wage, rent, bank charges, interest, tax on real estate, automobiles, repairs, phone, accounting, insurance, depreciation. If you have assets, it's a real real expense. You're not putting cash out, you're putting cash out when you buy that $10,000 machine, but 5 years later it's worth nothing. So it's actually, it costs you something, but it's not a cash cost every month. So back to here, if you're, whatever your fixed costs are, it's $27 over that period of time. So where the real magic of this goes, back to the front sheet. So if you're doing 250 orders a month, with those costs, those are the same, we'll do a what if. 8.3 orders a day. The average order value is $75 at that 50% margin. It brings it from all those other sheets. So you have your sale price, your gross margin, your marketing cost, your pick, pack, and ship cost, your fixed cost per order. So that tells you in this scenario, you need to do 1.3 orders a day to break even. By doing the 8 orders a day, 250, you're making $17 an order. That much profit a day, that much profit a month, that much profit a quarter, that much profit a year. There's your gross sales in a month, your gross sales in a year. Does everybody see that? This is where the magic happens, so where you can start making decisions before you actually do it. Okay? So we'll just do a slight change to each one. So we're going to do a what if. So what if we sell, we won't even change the price. We're still going to say at a $75 sale price, okay? But we negotiate with our supplier, and we're going to buy that product for $32. Okay? With that one change, we'll go back and we'll do changes in each one. Look what it does here. So instead of 1.3 orders a day, on the same amount of orders, 1.8, down to the profitability per month. So that's an order, so we're making an extra $3 an order. We're making an extra $700 a month, $2,000 a month, $10,000 a year. That's on a small thing, okay? We go to the next. Pick, pack, and ship. Do your own, but let's say we negotiate our courier fees by down to $5. Back to your break even. Boom, we're down to here. Look at what our profit changes. Shows our profit change and how many orders a day on the same amount of orders. Little changes. Our marketing costs, sorry, I did that in the wrong column. It didn't change it. That's 5 there. I put it in the, not in the what if. So that other one went down to 1.3. All of a sudden, our increased profit 51 to 63,000. So our marketing costs, instead of $8, we get it down to $6.50. We negotiate, we get a better ROAS, whatever we do. We go back to the break even, down to 1 order a day. We haven't changed this yet. Wait till we start changing that. Shows you the difference in the profitability. And this is just a small company doing $100,000 a year. Okay, you start getting, and we'll play with some bigger numbers here. But you can make decisions and look at, if I change this, what it does to my break even per order, my profit. Your fixed costs. You know, we change them down to 8,000. Any little change in the back end changes the front end. But then we do things back to here. We take those changes and we go to 500 orders a month. Boom, it tells you. So if I want to scale, I know what my costs are. So, you know, we're making 50. I'm working part-time on this gig. I want to go full-time. How much do I have to sell to make a full-time gig? You know, you got to get To increase at 100 grand, you got to go from 1.3 orders a day to 0.8 orders a day to break even. And in this case, 16 orders a day, you can make that extra 100 grand so you can quit your job and go full-time at this. See the power of this? Any little change brings it back to your break-even point and your profitability point. Any questions on this calculator? Here, I'll get you. Where'd that microphone go to?
Hello. I said, can you repeat the question because I didn't hear the question.
Yes?
Can you repeat? What is the question? ما كانش سؤال.
What is your question? I'm sorry.
There is a question? No.
Yeah, everything's good. Does anybody have any questions on this or
No,
doesn't understand something?
Yeah. My question is when we change the cost, the orders per month doesn't change.
What doesn't change?
The orders. It means that.
Yes, your orders here. We went from 250 orders a month to 500 orders, 8 orders a day to 16 orders a day in this scenario.
No, before that we changed the.
We changed back-end costs, but we
yeah.
kept the same amount of orders.
The same orders.
Yes,
All right.
and you can change as you go. Okay, if I'm going to make this change in my business, it might affect the orders per day or
At the
not.
same time, yeah.
Yeah, you can change anything, the back-end, front-end, and it'll show you that.
All right. Thank you.
So for an example, you're a digital agency.
Yes.
So where you could use this, we'll do an example here. So we'll go back to the 250 orders a month. We'll go to the marketing costs. And here instead of, and we got to play with this a little bit, we're going to put, you're going to charge them $1,000. And they're going to spend on Facebook $3,000. Okay, there's an example. So you go back to the front end. This is going to, in that case, their profit has gone down. Okay, their break-even point is less per order, but you're good by doing that. Then you can show them by me doing your ads for you. Then you go up here and you play with this. Where's my mouse? So it's probably 280. It's about 270. 275. So that's about equal there. So if I do this, we need to get 275 orders a day or a month versus 250, but you know what? I'm going to do a whole lot better job for you.
All right.
We're not going to get 275. We're going to go to 350. And if we do that,
It's not a problem.
look what it makes. Look at the profitability difference it makes after paying you to do that.
It means even if the cost of marketing rise, but the orders will rise up too.
Exactly.
All right.
And it brings it all back to this thing, to the break-even point and the profitability per order, no matter what. So you can make financial decisions before you make them and see the effect.
All right.
And it's a great way to project your cash flow ahead. So if I'm doing this, then I know exactly what I'm going to spend on pick, pack, and ship, so you can plug those numbers even into a cash flow projection or a budget. You can use this calculator to project ahead. So hopefully you understand this. It's basic accounting, but it's such important things to master and learn this stuff and know your costs and know the effects of making changes. Any other questions on this calculator? Or want me to plug other examples into here? Anybody want to put their numbers into this if you know your numbers? Any takers? Here, we'll get you the microphone.
I just want to ask about the seasonality. How do we deal with it in the break-even?
So, with history, you'll know your seasonability, right? If you're a new business, you don't know what it's going to do. But backed by keeping your records, keeping track of this, you know this November what last November did. So then in your projections, okay, we know we have a 20% spike in Q4. So you can plug these in. So can I afford to spend a little bit more on this or that in this period of time? And this will tell you to do that. And don't get caught up, especially with fixed costs. You're better to maybe contract out certain things for seasonality. And you can plug those things into here before you spend it to see what the effects is, how many orders you need, or your profitability per order. Does that answer your question? Yes. So it helps project your cash flow, your profitability, even seasonality. You can do one of these for each quarter, for each month. So we know last year we did X number orders. This can be any period of time. It doesn't have to be a year. It could be a day, a week, a month. But this by a year, it brings it back to a day, which is the power of this. Any other questions on this one? Then I'll show you the lifetime value calculator. Okay? If we find that. I'm so used to Max. Where did my computer guy go to? Was it you that helped? It was somebody. I don't know why the spreadsheets all disappeared. Oh, I think, no, that's the break-even one. Here we go. Here's the lifetime value calculator. So here's an example, the power of getting people back to your stores, buying more often. So these are the same now. So looking at, we have 500 customers. We deal with 500 people on an annual basis in our business. And you can plug whatever number in. You have this calculator, you can do your own. It costs us $25 to acquire that customer. You plug in whatever number it is that it costs you to do that. The average, we'll use this $75 one again. So the average time when they buy something, their sale is $75. Our gross margin in this example is 45%, and the average customer buys 6 orders a year. So at that math there, we sell each customer $450 a year. We get $202 worth of gross margin to go towards our fixed costs per customer per year. The average customer, we've been in business for a while, knows sticks with us for 3 years. The average customer, and you want to extend that out, right? People die, people move, things change, they don't need a certain thing. You want to keep them around as long as you can. But in this example, the average customer we keep for 36 months. So the lifetime value of that customer is $582. That's how much profit we make per customer in their lifetime of dealing with us. On an annual basis in that business of having 500 customers buying 6 times, we do $225,000 in sales, $100,000 worth of gross margin. Our fixed costs are $75,000, so we make $26,000 a year. You can plug, if it's $10 million a year or $50,000 a year, plug into here. This is where the magic happens with keeping customers. The same 500 customers, But instead of $75, each order, we're going to sell them $90 now. We're going to upsell them, sell them something else. So here, the same 500 customers at $90, same margin. They're still buying 6 times a year. Instead of $450, they're giving us $540 a year in sales, and we increased our profit per customer by $40, $243. Here, I'll put this down a little bit. Just make this a little. Still see that okay? Everybody can see those numbers still? So if we extend the life, we're going to say the average customer sticks with us for 4 years. So back to that, this calculator, lifetime value has gone from $582 to $704 per customer. So on a yearly basis, our sales went from $225 to $270. So we increased our sales by 20% just by getting them to buy a little bit more, not even many more times yet. Same fixed costs, we've raised our profit $20,000 a year. Over the lifetime, we've raised it $60,000. And these are small numbers I'm playing with. You start getting into high 6 digits, yes? Want to get a microphone, then everybody can hear?
Just I want to understand the amounts as a customer and the lifetime value. How the calculation was done. Thank you.
So to come up with the lifetime value, this customer here, for an example,
Yes.
they buy 6 times a year. Each time they buy is $75 at a time. And that average customer sticks with our business for 3 years. So they're going to buy 18 orders over the time that we deal with our customers to know how long the average customer stays buying from us.
Okay.
Okay? And you want to extend that. You don't want one purchase. You want to keep them for multiple years if you can. Okay?
Okay.
So then that boils down to it's not your sales times 6 times that, it's the margin, the profit you make on the order. Okay, so the gross margin in a year, you're making $200 a year per customer times 3 years minus your acquisition cost. Because it costs you $25 to get that customer originally. After you get them, it shouldn't cost you anything to keep them coming back. That's the value as well. So that's where you come up with that $582. How much gross margin you make over the time, less the acquisition cost of that customer. Does that answer your question?
Okay. Oh, yes. Thank you.
So here, in the same example, so he's buying $90 or she at a time. We raise our gross margin only by 2%, say, and you can plug whatever in here. So look what this does. Still buying 90, only 6 times a year. On a yearly basis, we've increased our margin by $50. Our lifetime value now has gone up to $736 by increasing just the margins. A little bit more at a time at a little higher margin. We haven't brought more orders in yet. The profitability, it's doubled the profit of this business. It took it from $26,000 to $51,000 a year. Everybody gets so caught up in getting new customers. Yes, it's very important, but if you look after your customers, sell them a little bit more when they come in at a little higher margin, we've already doubled the bottom line. Let's get now, instead of 6 times purchases a year, let's just go up 2, get them to buy 8 times a year. Look what it's done here now. Lifetime value has gone from $580 to $1,000. Bottom line in the business, which that's the thing that matters, we've increased our sales from $225,000 to $360,000, increased our sales by 60% without getting one new customer, dealing with our existing customers, coming back more often. Our profit has more than tripled, our bottom line profit, by just getting them to buy 2 more orders a year 2% higher gross margin, and a $15 upsell. Look after your customers. This is how you make money. And this is where buyers will buy companies. If you have a company, they buy once or twice and disappear. Nobody wants to buy that company. You have customers, you look after your customers impeccably. You have a good product that they like. Then you get referral business because they tell their friends, their neighbors, their cousins, their peers, you have a great business, you have a great product, you should go buy from them. What's your acquisition cost for them? Next to nothing. You know, just because of that, all of a sudden now, instead of 500 customers a year, just word of mouth or maybe a little new spend, we have 600 customers. So we're growing. What you want to do, you still want to get new customers. Look what that does to the bottom line. From 26,000 to 125,000. Still, it's a small business. We've increased our sales, almost doubled our sales by only adding 20% more customers to the business. So you see the what ifs with this stuff, you can start calculating the power of that. Instead of getting so caught up in lead gen, some of these little things make big differences to the bottom line. I know numbers can be boring, but it's important to understand this stuff. Everybody's kind of quiet, I hope. Any questions on this? Comments? Clear as mud? Does this make sense to you guys? Awesome. Everybody's quiet. I want to make sure you get this because this is so important. So important. Especially somebody was asking me before we started, you know, the power of a brand or keeping people coming back instead of just a commodity drop ship. You know, when you start building something that people coming back, that's where you make money. And you have and it feels so good to have satisfied customers come, and they'll pay more for it. You look after them.
Do you have some tips for businesses who have no consuming products?
A B2B business, you mean? Or a service-based business?
No, a product business, physical business.
Yes.
Like I sell a pen. It's not a this is a consuming product.
Yes.
But let's say a T-shirt or something.
Yes.
You have tips for customers to come back and come back and come back.
It's back to so many things. So deliver on time. Give them a great T-shirt, not a piece of shit that fades or shrinks the first time they wash it. You know, follow up. And back to nurturing, getting people coming back. The gold is in the list. By collecting and building a list and marketing to them. Send them a thank you email. You know, there's AI technology, bots, all kinds of things today. But just communicating with them. Gabriella had a session about email marketing today. We have digital agencies. By proper, not spammy emails, communicating with your customers. Making them happy. Hey, what can you tell us what we can do better? Thank them. That's how you build customer loyalty. Give them really good products. You have that new list. Hey, I have a new T-shirt. What does it cost you to send them an email? If they like you, they're going to open that email up. It's a quality email that's not spammy. Hey, I'm going to try that email or that new T-shirt because the last T-shirt I got from them I really liked. And I washed it 20 times and it didn't shrink and it still looks like new. You can't build a long-term business on crap products. People want quality. And you're not going to have a sustainable business selling shit. That only lasts so long because people aren't going to come back if they're not happy. The only time, people only buy for two reasons. This isn't a marketing thing. Marketing is easy. To eliminate problems or a pain and to gain pleasure. And when you can market to them and make them feel their pain and solve their pain and give them pleasure, they will keep coming back time after time. And in your marketing message, stick the knife in and give it a little twist. Make them feel their pain. Hey, this T-shirt is going to make you look amazing. You're going to feel good. The material, and deliver on that. Doesn't matter if it's a pen, a T-shirt, a digital product. look after them, follow up, nurture them. And that's how you get this. In our brand, on our e-commerce brand, every time we send an email out, phenomenal open rate, sales go up, costs us nothing. They buy something else. We get a new style in. Let them know, our existing customers, oh, they got something new. I like the last product. I'm going to buy the new one. And they'll tell their friends because they like it.
Just want to complete on that point. Let's say as an example that we sell like doors.
Yes?
Home doors.
Doors?
Yes.
Yes?
People don't buy doors any day. We will have very low returning customers because it's not a consumer product.
Yes?
Is there any tips, or how can we build a customer?
There again, you look after them well. They're going to tell their friends or neighbors. A joint venture in a business like that. So maybe they're not going to come back more often, but you can build from your reputation with them. So you make a relationship with a contractor, you know, a joint venture with him. He likes your doors, you look after him good, so he's building houses every day, he's going to use your doors. So that contractor is your repeat customer. Maybe it's a B2B, depends if it's a B2B or B2C model. You know, and there again, long-term sustainability, it's always better to have a repeatable sale, a consumable thing, a subscription, a t-shirt that they wear out, you know, a one-time thing. Yes, you can build a great business out of it and make a profit, but it's always better keeping them coming back. And if it is a one-time or a two-time, build joint ventures, look after them, build a referral program. Formal referral programs, because if they build a house and they're happy, chances are they're in a new subdivision or a new place in Canada. Their friends are moving, building new houses. They're going to tell, we need to come and see this guy to buy our doors because he's got great doors and he gave us great service. Just going to change this slide here. Any other questions? So just more questions, just a little bit about what I do. So there again, you know my experience. This numbers thing, what we covered is just a little bit. So my product, I sell an online boot camp workshop, and it's based around the 6 modules if you're here before. So it's strategy, sales and marketing, operations, systems. This is a big one here, is how to automate and put systems of efficiency into a business to scale. That's why people pay tens of thousands or hundreds of thousands of dollars for franchises. Because there's a manual, this is how we do it. This is McDonald's, this is how we set up the store, this is how we cook the hamburgers. That's why they're so successful. I teach you how to do that. That's when you have a saleable company. There again, the people component, how to find the right people to bring into your business, how to keep them, and how to plug them into the systems. Not that the people run the business, the people run the systems that run the business. So you can step back. I teach you how to work on your business versus in your business. So you can manage and do these little things to make money. So you're not busy. I tell people, back to numbers, say you want to make $500,000 profit in your business. That's your goal. You want to work 40 hours a week. You can put whatever number into there. You do that, your time is worth $240 an hour. That's the value you have to put on your head. So are you doing a $15 or $20 an hour job? And that's the problem with a lot of companies that don't get scaling and don't make money, is the owner's so busy doing all these little jobs within a business, instead of working on it, managing it, they're doing the $20 an hour jobs. Do the $240 an hour jobs, work on it, do these little things. How can we squeeze 3 points more margin? How can we save 5 points in our fixed costs? How can we change our marketing, work with somebody that really understands and monitor their performance with scorecards to crank it up, to get our marketing cost per order down $1.50, but we're going to get another 500 orders a month. That's where you start making money. Systemize a thing, and then somebody's going to come and want to buy your business. There's a business broker here, and she knows that, right? Who wants to buy a business that's in the commodity-based business and the owner's doing everything? It's not for sale. Nobody will buy it. So that's what I teach. So in my boot camp, in each module, there's a voice-over PowerPoint. It's all online. In each module, there's a workbook you can print out. You fill all your information in. There's a pile of templates, 18 templates, and 13 spreadsheets, and I keep adding all the time in the thing. So I have a deal for you guys. I'm not here, whatever. $749. This is the most practical MBA you'll buy. You'll learn more practical stuff in this course than you will in 2 years in most colleges. I'm not knocking colleges. It's practical stuff that works. And then with this as well, you get 2 months worth of group coaching with me, so online once a week for an hour or two. It's a group coaching session, and what I do there is Q&A. And then I'll take 1 or 2 businesses a week, and then what I do is call issue processing. So you have an issue, you have an opportunity. We ask questions, we bring it down and give you an action plan. We can use, you know, somebody else in the room that day. Hey, I just went through this and this is what I did. I'll take my experience, this is what we did, so we give you an action plan. And it always happens that you have this issue, I have the same issue, so everybody's learning from each other is part of it. So what I'm going to give you is that one calculator that I showed you at the start, where you put in your gross sales, your gross margin, your fixed costs. It shows your break-even point and your profitability, and then you can do what-ifs on a macro level. So I noticed yesterday some phones, the Androids, don't pick up this QR code. If you just point your phone at this, it should pop up. Just hit it, you put your email and your name in there. You get a download with the Excel calculator. And actually, you can book a free half-hour call with me on Zoom as well. Goes to my Calendly link, so whenever it suits you, so we can talk about your business. I can help you plug your numbers into the thing. If this doesn't work, there's a bit link. Here, I'll move this. And it's case sensitive, so put the capitals in there as well. Takes you and downloads that. And if you want to buy the boot camp, I give the conference a discount on that. So I'm not here to sell, I'm here to help. It's my passion today to take my experience. Not that I know everything, but I've been through a lot of shit. I've had a lot of success, and I've made a lot of mistakes and learned from them. That's what I want to do today is help people to take their business to the next level, to systemize the thing, make money, create a better lifestyle, and hopefully sell it or keep it running and start other companies. So, any other questions? I'll sit here and answer questions all day long about any components of this if you just want, till we get kicked out of the room. We don't have any questions. You want to grab the microphone, please?
So thanks for the valuable content that you give us, and I want just to ask about the taxes. Like, why everyone talk about taxes in the business when we can escape them? Like, for example, if we see Amazon, they pay $0 in taxes. There is also McDonald's that they pay no taxes. And after I checked that, I found that there is a law, that is 1031 law in America, that allow you that if you generate a revenue, you can and you invest it, you pay no taxes on it. So why should we make a revenue and invest it without paying the taxes? It doesn't make sense now?
So your question, why should we pay taxes?
Yes.
My accountant told me a long time ago, because I bitched and chewed and was really pissed off, pardon my language, that I had to pay income tax. And he told me, if you weren't making money, you wouldn't be paying income tax. So do you want to make money and pay tax or not? Now, every country in the world has different tax rates, and there's a lot of things you can do, and I'm more familiar in Canada, the tax laws, to minimize taxes. But in Canada, I don't mind paying taxes because I know I'm making profit. If you don't pay taxes in our country, you're not making any money. And there's a lot of things you can do to minimize taxes.
Yeah,
And corporations, and I don't know about over here, like I know at home, if you run a sole proprietorship, so you're claiming that income personally versus in a corporation, huge tax difference. And then you're only paying personal tax when you take money out of that corporation, and you can take it out as a wage or a dividend. There's all different tax rates as well. But I can only speak for Canada, and I bitched for years, and I've paid millions of dollars of taxes. You're only making a profit when you pay taxes. So I don't know if that answers, and it does. Some people get breaks, but the thing is, another point there, you can't worry about Fred over there. You have to worry about yourself. Does that answer your question? I know nobody wants to pay them, but you know what, that's life.
No, just because I watch a lot of entrepreneurs that they talk about taxes, and they always talk about like they pay no taxes. You see, like for example, I watched Grant Cardone, and if you know it, it is a real estate businessman. In the first of when he started a business, he didn't pay no taxes because any revenue that he generated, he invested in real estate. So he paid no taxes.
And you can do things to reinvest, but still, there's a lot of things you do to minimize by reinvesting in that. But if you're making money, at the end of the day, taking money and putting it in your pocket, I know in our country the government wants a piece of it. And if you're not putting any extra money in your pocket and not paying taxes, you're not making any money, and that's not good because we want to make a profit. And there's lots of things you can do to minimize, and that's another whole time. And I'm not an accountant, but I've dodged a lot of tax. Not dodged, I've done things. You know, in Canada, I don't know about here, we can set up trust corporations that own the main corporation to shelter money, to shelter taxes, to pass on equity and income to our next generations and things as well, or to protect ourselves. So as you get bigger in scale and have a large net worth, there's a lot of things you can do. And it's about being smart and investing into smart tax accountants or lawyers to set that stuff up if you get to that level.
Yeah, thanks. And also I want to ask you another question is about the businesses. Why should we grow business and sell it inside when we can buy and sell businesses? I can buy business, grow it, and resell it.
And it depends what your business model is. I talked with Isabel this morning. That's her business, is selling businesses. And probably a lot of those businesses, for somebody like myself or somebody with talent, buy that business, clean it up, fix it, either run it or sell it then. It's like buying a dilapidated house. A lot of people make a fortune on buying a shit house, piece of real estate, fix it up, paint it, put a new driveway, put a new roof on it, make it look pretty, and make money. You can do the same thing. Depends what your business model is. And you can make great money buying broken companies, fixing them. And you don't have to sell a company, but you should. I always tell people, back to if anybody was at my session yesterday, you got to have goals, written goals, and a plan. You have to know where you are today and where you want to go. You should know your exit plan with any business the day you start it. So many people start a business and they're doing it. What's the end game? Do I want to run it for 5 years? Do I want to run it for a lifetime? Do I want my family to take over that business? Do I want to sell it? Do I want to get it going, automate it, that it runs on its own, and start another company and own 50 companies? And there's no right or wrong, it's what's for you. But you should always start with the end in mind when you start a company. And it boils down to profit, because no business is sustainable unless you make money long term.
Thanks for.
And not about, you ask money here, this is a numbers thing, but ask me any questions you want. If I don't know, I won't BS.
Yes, I want to take the chance to ask you about your opinion about the giants companies like Amazon, like the e-commerce company. Do you think that in the future, 10, 20 years, can we compete with them, or they will take all the markets and nobody gonna I mean, do the e-commerce locally, or for example, here in Morocco we have Jumia. Jumia, it's like Amazon, it's like AliExpress. Donc Jumia, it's now it's in the Wall Street. It means that in Africa, she's taking all parts of market. So what do you think?
I don't have a crystal ball. But one thing those guys do, I know back in Canada or North America, Amazon does all those things phenomenally.
Yes.
You go, you press the button,
Yes.
you get the email back, you get a great deal on it,
Yes.
it shows up at your door tomorrow.
Food, e-commerce.
Doesn't matter. They look after you
services.
impeccably.
Yes.
So there's always room. People always want to buy something that's good and get good service. So if you give shit service, you have shit products, you're not going to be in business. You're not going to be able to compete against the Amazons of the world. I think, and I teach people in the strategy session of starting a business, and look at the market potential. Look how big the market is. Look who's playing in that market. What are they good at? What are they bad at? What are you good at? What are you bad at? And if you can niche something out, something's unique about you and your product or your service, there's always going to be a market. The gentleman forgets that started Amazon. He started in his house at a desk in the 90s.
Yeah, in the 90s, but now.
He just gave his wife $80 billion, right? I
Yes.
give my ex-wife a lot of my money too, but we won't get into that. But you know what? He started small. Everything starts with a thought, and I did that yesterday.
Yes.
And if you think it's a mindset, and as an entrepreneur, there was some, I have a problem saying some words, statistics about depression, about a lot of things that entrepreneurs deal with. But it starts with mindset. And we are what we think about.
I think we can do that, build something from scratch, but it's not gonna be e-commerce.
And nothing is easy.
Because he's now he has the money, he has so we can't compete with that. We can start something else. A new
Exactly. Look for a
technology,
niche. Look for a
new-
need. That's why I started this, because there's
Yeah.
a real need. There's dozens and thousands of people online teaching sales and marketing, how to blow up businesses, how to get leads, how to convert. Who's teaching this stuff? Very few people, and that's where I seen a need. I have a little bit of experience that I can help people. So there's a niche. It's something new. There's a new market.
The e-learning, yes, the e-learning.
And I can
Yeah, it's new.
scale it. This business from day one is automated. I can have 5,000 people today download this learning course,
Yes.
and I can be any place in the world. So I found a niche. I'm solving a problem for people that other people aren't solving, or very few. There's some out there, but not the value and the practical lessons in this thing. So it's finding something, and think your beat before you start. There's no sense in starting that. But there's always opportunities. There will always be opportunities. There's going to be, in 10 years, in 20 years, in 50 years, a new Amazon of something.
Yeah, but you know, like, who says that you need to have your e-com store for 20 years? Just run it now for 5 years, and we'll see what's happening in 20 years. But if you start worrying about what's happening in 20 years, you're never going to do anything.
Yeah.
I can guarantee that.
As like I said, I don't have a crystal ball, but if there's an opportunity today, take advantage of it. And keep your scorecard so you know where you are. Know your break even. So figured out that you can start making money in 6 months or 12 months or 2 months versus 36 months because it's so much unknown. That's the problem with so many startups and venture capital. They're burning cash, burning cash. All my companies, I have bootstrapped myself. It hasn't been easy. Has not been easy. But having these big, far-off dreams and getting all this venture capital and burning money, yes, sometimes it pays off, but of those deals, it's like 1 in 10 or 2 in 10 that venture capitals make their money. The rest they lose. You know, sometimes I use the analogy, I talked about it yesterday. Business is a marathon, not a sprint. What I do, my niche is from startups to 10 million bucks. I can really help them people. We walk up the steps. We walk from the first step to the 10th step. We don't run and trip at the 5th step and fall backwards. And that's the problem, especially I'll pick on the younger crowd here, the millennials. I have 3 of them at home. They want everything immediately. They look at the people that are successful. Very few of them did it overnight. It took time or years, right? And you can. They talked about it this morning. If I have a widget, I have this widget, and all of a sudden, I have an influencer that blows us up, and I sell $1 zillion. Hey, I got a business. But then what happens is you don't have all the systems of efficiency. You have logistic problems, inventory problems. You start going out and renting offices, and it falls apart tomorrow. That's where this break-even calculator can help people, is slow and sustainable wins. And you can go slow and sustainable and build one hell of a profitable business, you know, in 2 and 3 and 5 years. And in 5 years, if something changes, you pocketed a bunch of money. And you know in year 2.5, things are changing because you got the scorecards and the radar's changing, so we need to change something. You can't walk around with, in denial. Deal with things today. If something happens today, know your numbers that you can make the strategy change today. I get ranting on this stuff, but.
You need to be in the market. You need to find a problem. But if you're not in the market, you will not find that problem. Then you're not going to solve it. You stay in your place.
Yes.
You should be in the market, and then when the opportunity comes, you can blow up more than Amazon.
Yeah.
If you're in the right place and you have that skills that the market needs.
Yes.
If you have that at that moment, you can scale more than that. But if you just sit in your place and said, in 12 years and 7, you're going to do
Never do anything. I've had a formula on my computer screen for years. A thought, because everything starts with a thought, plus a plan, plus action equals success. Sometimes the action, you screw things up, you got to adjust it, but that's the only way you're going to get someplace is by putting something into action. So many people come up with a great idea. How many people have a great idea? I'm going to invent this thing, and 6 months later, you see it in the marketplace. That happens because they didn't put it into action. Put stuff. My dad, as a little kid, had a sign in his store. It's ingrained into my head. Somebody told me yesterday I should make a t-shirt. A man who tries and fails is better than a man who doesn't try and succeeds. Don't be afraid to make mistakes. Try things. Calculate them, though. Use the spreadsheets to put the calculations. Hey, is this a viable thing? I'm going to try this business. This is what my cost. This is what my margin. How much do I have to sell to make a profit? When am I going to make a profit? Can I make a profit? How big is, the Amazon? Maybe there's a niche they're not doing something good at. And we can take advantage of those. In my e-commerce business, we built our own brand. And we got, forget the actual terminology, but a brand certificate. We had to go through some hoops to sell our own brand on Amazon, to be certified. We did that to build brand loyalty and recognition because those were the eyeballs are. So we can take advantage. If you're selling a commodity on Amazon, they can turn you off tomorrow. 95% of our sales were in our own Shopify store. A little bit on Amazon, they grew, but we used that for brand recognition to take advantage of that traffic. So there's ways of taking advantage of things as well. Any other? We can get him the microphone.
It's not working.
There we go.
It's working, yeah. I said thank you for the presentation. Since the presentation was about numbers thing, after running a business for a while and making some profit, just asking for that percentage of the profit, do you recommend, what is the percentage that you recommend to reinvest it in the same business? And what is the percentage that you recommend to reinvest it in other businesses that make you passive income? You got my point? Or?
Yeah, that's a total individual thing. So you have to look at your business and what's the scalability of that business and how much return. So you have $100,000. Use that for an example. If I reinvest that into this company, how much am I going to make? What is my return, short-term, long-term, going to be on that? Versus taking that $100,000, starting another business or starting a real estate. I always tell people, and I run multiple companies in my lifetime. Not very often, I only ran one. I had 2 or 3 at a time. That's just me. Diversification, I think, is key, and not having all your eggs in one basket. I was talking to a gentleman yesterday. He has a great business, making a great profit, but he's only selling on Amazon. I says, what happens when Amazon tomorrow says, we don't want to sell your stuff tomorrow? He's screwed. I says, you should be taking some of that profit and doing something else with it, because that you control. Not that you're totally depending on Amazon of the world, because they're greedy. It's how they get that big, right? If they see you're taking some of their pie, they want that whole pie for themselves. So by diversification, sometimes you're better to take that and start something else, and maybe that original company can keep growing, maybe at a little slower rate, or you have to look at it individually, right? But diversification, it's given me a lot of success. And I've owned a lot of real estate over the years, and I've never lost money on real estate as well as a side investment. I don't know what it's like. It's different in every part of the world as well, but diversification is a very good thing. Hopefully that answers your question.
Yes, thank you.
Any other questions? About anything. I'll try to answer any question about anything.
Yes, I have 2 questions. My first question is a little bit specific. Just I want to know if you are an experts in tax laws in Canada, because I am very interested about this field. And the second question, I want to know if your program it contains mentorships. It means that you will follow up each one, and you can push the person to get the result that he wants, or that he engaged at the first time.
Okay, I think I understand that. The first one, I'm not an accountant. I don't profess to be an accountant.
Okay.
Tax laws, I think, in any country change all the time, and it really pays to have a good tax accountant. You know, sometimes I get especially selling my one company, the bill from the accountant and the lawyer was ridiculous, but it was worth every penny of it, because they're on top of it. They know the tax laws. They know, if you want to call them, the loopholes, and things change. So sometimes you have to invest the money into professionals that give you value. And I think tax area, because it changes all the time, it really pays to invest into a good tax accountant, and at times to have a lawyer to make you aware of different litigation things, or copyright. It depends what the situation is. The second, I think I understand the mentorship. So basically, I do 2 things. I'm starting to, and they're raw as hell, because I'm not a fancy guy. I'm the way it is. I'm a farmer from Canada. My daughter's in social media. She says, Dad, I built my own businesses basically with banging on doors, e-commerce, digitally. People, and what you're doing, people have to know and trust you. So I'm starting to do Facebook Lives. I'm putting free content out on the Biz Coach Academy Facebook page. So that's kind of a mentorship. When you buy the boot camp, you get group coaching for 2 months for free. After that, if you sign, it's only $200 a month. So that's a mentorship. So you come online with me every week for an hour or 2. We talk. We answer questions. You learn from me. So that's kind of a mentorship. I only take a few clients on, because I'm coming into my 4th decade. I don't want to work 80 hours a week anymore. I'm still up at 5 every morning, but I take a few select clients on. Again, way too cheap on a one-on-one. So if you want help with your business, I don't go into any contract. It's a 30-day thing. You pay me 30 days ahead, because then you can fire me if I'm not giving you value, and I can fire you if I kick in the ass and you don't do something. So I'm not going to waste my time just for sake of some money if you don't get the benefit or do the things I suggest for you to do, to put into your business to take it to a level, or I give you the return. There hasn't been a business since I've started this, and even long before I started this, in the first month, within a call or two, an established business, sales from 200,000 to 3 million, that I haven't found 50 to 200,000 bucks by my first look into the business. My girlfriend gives me hell all the time about being humble, but I have a skill to look at a business and I can just see what's right and what's wrong within it. I understand the numbers, I understand the marketplace, and I just get it. I don't know, I guess it's bred into me, right? So I can look at your business to your business. We talked at breakfast, we never met before, and I've seen all kinds of opportunities with what you're doing, right? So all I want to do is bring value and help people today. I don't want to be a zillionaire. I've made my money. I'm not trying to, I became it's funny how life changes. I'm becoming a minimalist. I've sold a bunch of shit. I don't want my shit. I don't want to deal with shit. I just want to be able to travel, enjoy my life. I don't want a lot of, I've been there, done that. I've had the big house bought and paid for. I'd like to drive a nice car. My passion today is to help people. So.
Thank you.
There's guys back to this course that don't even offer as much. They're charging 10 and 20 and 30,000 bucks for what's in this thing.
In the beginning, you mentioned that you sold multiple businesses.
Yes.
Can you tell us more about the selling business process, and when you decide to sell your business, and how do you calculate how much your company worth?
A company, I'll answer that one, is only worth what somebody's willing to pay for it. And a lot of times it boils down to a couple things on a value of a business. Generally, it's free cash flow, profit by a multiple, especially if a private equity firm's buying it, and they're the biggest buyers of businesses today, automated businesses. In the US right now, they have something like $3 trillion sitting on the table looking to buy companies. I'm actually a headhunter for a private equity firm in Canada that are looking to buy companies. And they want companies that are making profit, automated companies that have sustainability, and customers keep coming back. My 5 companies I sold for 5 different reasons. My first company, my feed and grain company, I was 20 years old, 21 when I started. I ran that 9 years, so I was about 30. I scaled that thing from 0 to about 5 million bucks in the 1980s. I woke up one day, so in 1990, so I was in the thing 6, 7 years. The supplier for my company, the product we bought was our main product. The sales rep helped me build that company. He knew everything about my business. Big lesson here. I woke up one day, he's my competitor. He knew all my customers. He went out and he was very smooth. Told them lies about me. He took half my business. One of my large customers was buying $30,000 worth of feed a month from me. He had accounts receivable. He owed me $70,000. He went bankrupt. The banks called my loan. I was working on borrowed money. Still had a good business. My business went down. I was still doing a couple million bucks, but in the meantime, I started the road construction company and the parts distribution company in 90. This was like 92, 93. So I seen a better future, back to diversification in these other 2 companies. So I went to a neighboring feed dealer and said, hey, Ron, I still have all this cash flow. The bank called my loan. I had to come up with some cash. That was worth a lot because he could add those sales into his business and not really change his fixed costs. So I got money out of that business, which fueled my other 2 companies. The road construction company I ran for 23 years, the parts distribution company 13 years. The parts distribution company, and I'm telling stories here, we had rights to an exclusive line of filters and some other products in Canada. We built this thing up really big. And then we started buying and selling lubricants, oil, because every time our main product was filters for heavy equipment and industrial equipment. So every time somebody used that, they needed lubricants, oil, grease. So we were selling that. So the company that we were buying the lubricants from got bought out by a big guy. And the big guy wanted these filters that we're selling because we had exclusive rights and we had a hell of a business. So they could add those sales into their business. Again, no real fixed costs. The gross margin almost went to the bottom line. So they approached us to sell, and we were sharing a building with another business. I needed more space, and it was growing, and they offered me a great multiple. So we sold it. The pool, hot tub, the retail business, I just got burned out. The road construction business, I wanted to slow down, was making a phenomenal profit at that time. I got tired of retail. We moved out of that town. It was a systemized business. It ran without me again. We put it up for sale. Building, inventory, goodwill, everything. We used a local real estate agent. And within 2 weeks, we had 4 interested parties, and we had to decide between 2 firm offers. The road construction company, that was probably my largest and most profitable business. I was married 25 years, I got divorced. So my wife owned at least half of everything. So I thought I had owed nobody nothing. We had a lot of assets, making a lot of money. Would have cost me 7 figures to pay her portion out. I was going to do that. I went to the banks. They were willing to lend me the money, go into a big debt, and I woke up one day, why the hell do I want to do that? I'm getting kind of bored. I'm not trying to be arrogant. That business was so automated, it just worked. So I said, let's sell it. So we went out, hired a business broker, and we had multiple people competing, and we sold to a private equity firm. So I sold the pie, give her her portion, I kept my portion. Away we went. I traveled the world. I bought a cottage property. I played with real estate. I got bored, so I started an e-commerce company. And why did I sell that? I started that to learn the e-commerce world. Totally transparent. My son was in the business with me. He did the digital part. I'm getting a little personal here. He was a lot like his mother. And we butted heads, and I said, fuck it. I don't need this. And I had somebody that wanted to come in and buy the thing. I'm still a silent partner, portion share. I learned what I wanted to do. I discovered that this is what I want to do. I didn't want to fight with my son anymore. So I fired him, sold that company. Still have a share. I still have a share in 2 e-commerce companies, actually. So different story, but it's back to selling. It's generally multiples of profit, of free cash flow. And companies will buy, just like I said, sustainable sales. So I'm selling this widget. You're selling that widget. That widget goes with this one. So I'm going to buy you because I can take that into my company, have no fixed costs, and I'm getting a list. I want his list because I can market this widget to his customers and combine them into one. So generally, those are the 2 sales. Somebody wants to add your company into somebody else's, or a private equity firm, and they're the largest buyers of companies in North America right now. They just buy companies that make profit. Long-winded answer. I hope that answered your question.
Thank you.
Any other questions? No? Oh, now they got another question back here. About anything. I'll try to answer any question about anything.
Hi. So my question is about scaling the business, and especially about the e-commerce business. So me and for now we are 3 persons in my business. Me and my partner and a VA, so for customer service and fulfillment and everything. So is there how to go to the next step? So to scale the business more, is there some steps to do that, or
Well, number one, you got to know where you want to take it. So and that's what I help people do. Where are you today? Where do you want to go? So you got to know where you want to take it to. So I'm doing, I don't know how much business you're doing, $500,000, 5 million, whatever. I want to take it to there. So then you have to, and that's what I really help people do. Okay, what is the action plan to get to there? Break it into little chunks, and then back to, in the operations side, we build an organizational chart. These are all the tasks that we do in these different departments. So in operations and customer service, you've got that already. You have a VA that you're outsourcing through Zendesk or something, flowing to them, they're looking after your customer service. So is it determining, back to what I said before, are you worth $240 an hour or are you worth $20 an hour? So as you get busier, what's holding you back? What do I need to do? Is it just, okay, we've got a good ROAS on Facebook ads, we can scale that way, but as soon as we start scaling, is it a different 3PL center? Is it our own warehouse? Do we need our own bookkeeper? You need to determine what you can do and what pieces in the operation that you need to put somebody in. So how can you scale, put a plan in there, you know, because scaling sales, but then doing it profitably, back to the what if calculators, plug those costs in before you actually spend the money. Is it worth doing that? Where can I best put the money? Does that answer your question?
Yes, that means I know, first of all, know my target. Know.
Marketing is simple. We have marketing people. It's simple, but it isn't. There's a triangle of marketing. So first of all, and this is my opinion, you have to know what's unique about you. What's your story? What's unique about your product or your service? Okay, so what's your message? What's your hook? What's your message? Then you have to know your ideal customer. Who is your avatar? What is their pain? People buy for two reasons. What is their pain? What is their pleasure? Does your product, is it unique to solve that problem and give them pleasure? So you build your messaging. So many people, and I'm not a marketer, in their messaging, in their marketing, they dump on people. Features, benefits. You have to get to an emotional state of that person. So in your messaging, what's their pain? Hit that emotional message and overcome their objections in that messaging. That's the real secret of messaging and marketing. I've got a marketing, maybe you disagree with me. Find your ideal avatar. Who is my target customer and my profitable customer? So tearing it down, it's a certain demographic in a certain area, and then you have to find where you get their attention. So what's your unique message, your copyright? What's your to who? And how are you going to reach them? And one of the biggest problems I find in any sales, and it depends if you're bringing leads in or digitally, is people give up too quickly. In the old days, we always said it takes 7 touches to convert a prospect, a lead, into a customer. I personally think today in the digital world, it's 10 to 15. You know, and the power of scaling. So if you have a really good message, targeted to the right people, you send them in their news feed on Instagram or Facebook, we'll use that for an example. They see it, they maybe click on it, you've got them pixeled now. Maybe they haven't given you their email yet, or you haven't used AI in a Facebook Messenger bot or whatever. Retarget them. Give them value, just like me. I give so much value up front. I give you a calculator that can change your life, change your business for free. And you can call me and I'll talk to you about your problems to prove to you that I might know something. So back to your widget, keep retouching them, give them value, make them feel their pain, show them that you're not just some guy after a quick buck. That's how you're, and then when you get them, nurture. Do the things that I talked about with your customer to sell them something more often. Keep them happy, get them. In my hot tub business, I talked about this yesterday. After about 4 or 5 years, we sold a really high quality hot tub. The average sale was $8,500. 70% of our new sales was referral, because we look after our customers so well, and we instituted a formal referral program, affiliate program, influencer program, whatever you want to call it. that 70% of our new sales, they brought these referral cards in. The sale was literally done when the people walked in the door. We just had to close them. So we scaled that way. We did over $2 million of referral business a year in that one business by looking after our customer, keeping them happy, and they were our salespeople scaling our business for us. Marketing cost was next to nothing. That's how you make money. And then you have a business that you can sell. Does that answer your question?
Hello, thank you for your presentation. So I have a question regarding to setting target. As a setting target, your target in your business.
Yes.
Everyone should set a target in your business, but sometimes the person, we found ourselves that we haven't achieved this target. Or for example, we achieved a target, for example, a specific period of time, and then in a specific period we found ourselves in trouble, for example. How by your experience, how you behave in this situation? How do you solve this problem? Do you begin from scratch, or do you, in this situation, how do you behave?
I think I understand your question. Were you at my talk yesterday?
Sorry?
Were you at my talk yesterday?
No.
Okay, so I started with the messages. So my topic was what I would tell my 25-year-old self for business success. So I basically went through 10 lessons. And the first lesson applies to this, is the ultimate success formula. It doesn't matter if it's your business, if it's your fitness, if it's cooking pasta on the stove. It starts with a vision. Okay, my business is here. I want to take it to here. You have to have a strategic plan. Module 1. You put an action plan into play. You start putting the action. Have your scorecards, week 1, it's not working. You don't keep doing the same thing in week 2 as you did in week 1 because it didn't work. You readjust. You sit back, and that's where working with experienced people, I talked about it yesterday, working with coaches, working with mentors, hopefully I can help you guys. With their experience, you don't know what you don't know sometimes, and by gaining experience, knowledge from a book, from a webinar, from a coach, to help you give a different perspective on things. But don't keep redoing the same thing. So don't go 3 months, shit, we didn't get the result. In 2 weeks, let's tweak it a little bit. Hey, this worked in our plan. Let's do more of that. This didn't work, let's adjust it and try it different tomorrow. Yeah. And I teach people in the strategy to list their 10 issues, challenges, list your top 10 goals, and then to prioritize those, your top 3 in each category. Don't work on all 10. What we do is I have templates in the boot camp to take your goal. We use a goal because there's 2 difference, goals and challenges, issues. Then we build an action plan back to that formula. Who's responsible for it? This is what we're doing, step 1, step 2, step 3. We get to step 2, go to step 3. Step 2 didn't work. Working with me, okay, let's go and adjust step 2 that we get the action that we want. Because not everything goes as plans. Never. Never does. You got to readjust. Does that answer your question?
Yeah, so it means there is not the same strategy that we should follow in each situation. That means every time we should adjust our strategy depending on the result that we have in this period to achieve next, for example, next target or
exactly. You know, maybe you're after a market that there's no market there. That happens all the time. People think they have the most amazing widget, but there isn't a market. Maybe it's ahead of the game. Maybe it's behind. Maybe it doesn't want. Maybe it's your messaging. A lot of times we're trying to sell this widget. It's not working. You change your copy. We got or change our target market. Who we're trying. Then it works. Don't keep trying to testing, split testing. Try something different. This doesn't work. Try something different. If that works more, do more of that. So every situation, if it's trying to scale a business, trying to get a better price on your insurance, getting a different product, maybe it's something to do with your product. People are buying it and it's shit. It falls apart. Your T-shirt fades after 2 washes. You got to change your T-shirt.
Exactly. Every time it is related to the product. For example, if the product is working good, so we say that the strategy is is doing good results. If it's shut down, so everything is crushed. Everything is so.
So then you have to analyze what shut it down.
Yeah.
What caused that?
So sometimes it's something external, something to do the competition or.
And there, again, not to go back to here, I have a little thing in there. Anybody hear of a SWOT analysis before? What is your strength? What is your weakness? What is your opportunity? What is your threat? Things change in the marketplace. You have to have your eyes on that radar all the time. So things change, the threats, to be aware, that's working on your business, not in your business, so you can keep your eyes on that thing. Something's changing, catch it before it nails you in the ass.
Yeah.
This is, you got to be on top of the game, and sometimes that's one of the biggest problems with entrepreneurs. They get so busy, head down, being busy, working in their business. They're not coming up to a high level and looking at these things. Having the scorecards on a weekly basis, daily basis, to, hey, has the dial changed a little bit, good or bad? If you don't do that, you wake up in 3 months, shit, I just got kicked in the ass. You have to be on top of it.
Yeah. Thank you.
Hopefully that answered your question.
I have a question. So, for what do you think referrals will work in high-ticket markets? Because when customers have, they don't have the need for money or cheap.
I never quite heard your question. So a high-ticket item.
High-ticket item. Do referrals will work in a high-ticket item market?
Absolutely, they work in any market. Probably more in a high-ticket market. And there again, with affiliate programs, that's like a referral program.
Do referral work with the customers? So, like when we sell a customer, we suggest to the customer that.
Ask them. You have a happy customer. Do you have any buddies that want to buy this service too? Especially if you have something to incentivize them a little bit, but half the time they're so happy that you're helping them that they'll tell their buddies. And the first lesson of negotiation is ask. Ask your customer, do you have a buddy that could use my service? Maybe you incentivize them. Same with negotiation. If you're buying widget A, I'll guarantee you 70% of the time you ask whoever you're buying the widget from, can I get a better deal? You can get a better deal just by asking. Costs you nothing. Costs you nothing.
Okay, thank you.
And then there's affiliate programs, there's influencer programs. Those are forms of referral programs. Like I know I'm going to scale this. I'm connected to a lot of people, and I'm looking for people that are connected to the entrepreneur world. I'll share the wealth. I have a really awesome affiliate program, automated, that I have a good person that knows people that can give sound recommendations to people who can use my program. I'll share the wealth. So that's how you scale.
Thank you.
Thank you. I love the questions. Keep them coming. Until they kick us out, I'll keep answering questions.
I want to ask you about real estate.
Real estate?
Real estate, yes. It's better to sell or to rent apartments?
To sell or rent?
Yeah.
I don't know what your question is.
Only
So if you own an apartment building?
Yeah. It's better to build it and sell it or to rent it?
Depends what stage you're at and what you want. I've owned income properties. You buy for X. Generally, you're buying real estate for two reasons. Appreciated value, that it goes up over time, and passive income, so the rent's either paying for it and giving you an income back. So I guess it gets to a point, your own financial situation, has that real estate appreciated to a value that's maybe plateaued and you see a downturn? That's probably a good time to sell it. Then you can buy when things get cheap again. Do you need the cash to cash that out to buy a bigger piece of real estate that'll give you a better passive income? That could be another time to sell it, or you're just tired of dealing with people, or you don't have a property manager. So it depends on a personal basis on that. Do you want to keep the passive income coming? Do you think that the appreciated value's got to a thing? Taxes come into play, so there's different, I don't know if that answers your question. Without looking at a specific situation in a specific time, it's hard, but real estate's always a great investment generally.
Yes, it's better to do it with a company or with individual.
Well, I know in Canada, in a corporation is so much better. I don't know about the tax laws here, because in Canada, unless you, in real estate, unless you live there yourself, that income, the capital gain is taxed at a higher rate. You're allowed, and there again, there's only a lifetime value in Canada of $750,000 that you can make on capital gains. Over that, then you're paying a high tax rate. If you live in it for a year and it goes up in value, you don't pay no tax on it. But in general, in Canada, and I don't know about here, you can shelter profit at a lot lower tax rate within a corporation and keep the money there, keep reinvesting in things. It's only when you pull it out, and there's different ways of pulling out in dividends, bonuses, wages that are different tax rates. So every country's different in taxes, but I know at home with corporations so much better. And it protects you personally against liabilities a lot of times as well.
Thank you.
Anything else? Okay, I thank you. Oh, we got another question. Hey, keep them coming, man. I just love this.
Another time for the high ticket markets. Do you think discounts are a good idea to do for high tickets, or it's a bad idea?
Why would you discount?
To push people to buy. It's like you give them an offer.
There again, that's back to marketing. It's back to value and the reason. Like I know my thing, it's way too cheap. I've had people go through it, you should be selling this for $10,000. I don't want, yeah, it's a different person. I want to make it affordable for the masses. That's where I am at. I'm not 20, I'm not trying to build my wealth. I put my kids through school, I've done my things, my lifestyle now that I'm becoming more of a minimalist. As long as I have my laptop and my duffel bag, I can travel, and I'm done with the bullshit of having all kinds of stuff. Right, wrong, that's for me. Everybody's different. I'm not judging anybody, right? Depends what you're trying to do, and generally if you got to discount things, anything, there's something wrong. It's priced wrong in the first place, or you're not giving enough value, or you're not touching the people enough. And you know, back to what I said before, you're not going to buy if you just see my thing one time. I got to build a relationship with you. You got to trust me, especially on a higher ticket item, right? So a lot of people give up. The closer something is to free, the easier it is to sell. Right? The closer it is to free, the easier it is to sell, but you got to give people value. And it's back to, we have a digital lady here, to messaging, to marketing, to giving value, to building trust, to building relationships. And sometimes it takes a little longer. And especially higher ticket things, depending on the value you're giving, you can undervalue it. I'm probably undervaluing my thing. Some people say, I'm not going to get all that for that price. That's too cheap, but whatever. I'm at the stage I want to give value, and I'm all ready. You go to my website, I'm getting referrals, I'm getting videos. Holy shit. I've had a meeting with Paul, he's done this. Look at what it's done to my business. I had a guy, back to a testimonial, and this is what sells stuff. He's a mechanic, a boat mechanic. And he was part-time, and he took the leap this past winter to rent a shop, go full-time fixing boats. Incredible boat mechanic. Doesn't know shit about running a business. So I went and had my first meeting with him. I made 3 recommendations in the first meeting. One is to get a bookkeeper. He was piling his invoice up. You have to have your books. You're a mechanic. You're not a bookkeeper. So he hired a bookkeeper to keep his books. I says, what do you charge an hour? He says, X number of dollars. I got my phone out. I called 2 of his competitors when I'm standing there. got their rate per hour. He's $35 an hour too cheap. He says, why are you charging this little bit? Well, I don't know. People, why do they determine the price of something? He raised his price 35 bucks an hour that day. And on every invoice, I says, are you charging shop supplies? He's using floor dry, he's using towels, he's using things in the shop. So he started putting a $10 shop supply fee on every invoice. Nobody's complained. He's a phenomenal boat mechanic. Those two recommendations this year is going to add between $120,000 and $150,000 extra profit to his business. He called me up about 6 weeks ago. He's got 5 kids at home. He says, we took a week off and went on a holiday. I've never been able to afford to do that before. Give people value and they will pay for it.
Thank you, that's very valuable.
Any other questions? Keep them coming, I love it.
All right,
I want to give
so
you value today.
this might not be related to e-commerce, but like, I want to ask you about your opinion of studies in Canada. And if you know any good business or business schools or unis that you can recommend.
You're probably asking the wrong person. I personally think our education system is fucked.
No, I heard that.
I spent $300,000 putting my 3 kids through school. My son, and I get in trouble. I talked to somebody the first day here. My son went to one of the best business schools in Canada. He graduated from economics and finance with a 92% average. He's super smart, but he has common sense. I brought him into the business. He couldn't even read a fucking profit and loss statement, pardon my French. Now, if you want to go get a job with a big bank or a corporation, you need that piece of paper. Are you going to learn stuff? Absolutely. I myself, I dropped out of high school. I did go back. I went to college. I got a degree in drinking beer for 2 years. I had a lot of fun. But I have an honors degree in the School of Hard Knocks and Street Smarts by doing it. So it depends what you want that education for. Yes, Canada has a really high quality of education. Universities are great. I think they're unpractical. They cost a bloody fortune to go to. But if you want a corporate job, you want to be a teacher, you want to be a lawyer, you want to be an engineer, you need that schooling.
I'm just trying to get some knowledge.
Yeah, and there's some great business schools. And you get out of there with that certificate, and there's some big banks, some big corporations, they're lined up to hire the people out of that. But you're in the rat race. I don't believe, personally, we need the rat race. We need the people in the wheel. But I'm an entrepreneur from that big. And on business, and there again, I'm plugging my own shit. That thing right there, you will learn more for $700 of practical stuff about how to set up and run a business than you'll run in any 2-year business college any place in the world. It's 35 years it took me to build this. Are all the answers there? No, and there isn't a week I'm not adding and changing something. Because I'm continually learning every day, and I can take that knowledge to my coaching clients and everything else. But school is important. I'm just not the best. Depends what you want to do with your future. And there's some amazing business schools in Canada that I can tell you. Depends what your end goal is. I know I ranted there, but.
All right, sweet, thank you.
I say it the way it is. I don't sugarcoat anything.
We are sorry. We asked a lot of questions today, so we really thank you for the value you give us. And I want just to ask you about the mindset.
Yes.
Like when you want to start a business, it is not easy to deal with. Like we have a lot of problems. That's why I want to ask you: how do you deal with problem when you want to start something? You find yourself just with the problem and you can get out of them. So what is this mindset so you can deal with that problem and you get used to it?
I think that's really where a mentor or a coach comes into play. We are what we think about. And to keep you on track, starting a business, being an entrepreneur is probably one of the toughest friggin' things you'll do. And that's why over 90% don't make it to year 10. They go out of business. But too many people try to do it on their own, especially as a young person. You don't know what you don't know. So you have to read, you have to learn, you have to make mistakes. But I think if I can give any advice, hire somebody as a coach, get mentors, join mastermind groups, learn people, talk to them about your opportunities and your challenges and get other perspectives on those to help you, to motivate you, to keep you positive. And it's tough.
Yeah,
it's really tough.
Yeah, it is, especially when you spend a year and a half looking for a business and you don't get the results. It is so.
But you can't keep doing the same thing and
course,
keep getting the same results and expect to have success. So that's back to, and I keep preaching scorecards, guys. Especially in the early stage, you have to know the friggin' speed you're going. You have to know the oil pressure. You have to know every number of your business, because if you keep spinning your tires, you're just going to burn your cash up and have no results. If something isn't working, you got to make a change and do it quickly, especially on a startup. So get the education, get the coach, get the mentor, whatever you need to do to help guide you, and don't keep doing the same bullshit and spinning your wheel and going in a hole, and it's hard on the mind. Yesterday they talked, the entrepreneur, the depression, the psychiatric, all those it's facts, but a lot of times the mindset, one of the biggest challenges I have getting people into this, and I'm new at this, is to get them to drop their friggin' ego. They think they know anything. I don't need any help, or I don't want to admit I have a problem.
No, it is not.
Which
it
is
is
mindset.
Yeah, of course. But that people that they don't buy that course is it just they don't have that motivation that show them that if they buy it, they will get results. You see what I'm talking about?
But there's a problem there. If they don't have the motivation, and I said it in my slides yesterday, you have to be committed 100%, 1,000%, and have passion in what you're doing. If you're not committed, doesn't matter what. If you're going to run a marathon and you don't practice, you don't start running to build up to a marathon, you're not going to make the marathon. You have to, and it's a mindset. And it's a lot of times it's not easy. You hit a little roadblock, you don't give up. I had a thing on my phone, my screensaver, a couple years ago now. I have my beautiful girlfriend on here. But the road to success, it showed an asphalt road just full of holes. You got to dodge those holes, and it's not easy, or everybody would do it. But you know what? There's back to the corporate world. If you want a guaranteed income, I think it was you I was talking to yesterday.
Yeah, of course. We talked yesterday.
Yes. And there's nothing wrong with it. We need the people. If you want a guaranteed salary and work your 10 hours a day and you're 40 or 50, that's fine.
No.
But the opportunity for an entrepreneur, if you put the work and the dedication, it's one of the hardest professions you'll pursue, but it can be one of the most rewarding professions if you do it right. And that's back to my talk, not that I have. Learn from people, learn from their mistakes. Don't be afraid to make mistakes, but don't make that mistake twice. And work on your mindset. I've read hundreds of self-help mindset books. I believe in NLP. I meditate, to get rid of anxiety, and that's why a lot of entrepreneurs turn to alcohol or drugs or whatever, because they just can't handle the anxiety, right? It drives them crazy. So there's a lot of things. I don't know if that answers your question, but
yeah, of course. Yeah.
Talk, communication. If you have a problem,
Yeah.
have somebody to talk to about it, not that it keeps inside and driving you nuts.
Just about like students, we can't afford the cost of like hiring a coach. Like we can't, for example, a coach they ask you, for example, I don't know, $200, $300 for 2 hours. But as a student, we can't afford it. Like.
Again, go and ask somebody. A successful business person. Can we go for lunch and have a coffee? Learn from them. You don't, unless you ask, maybe you ask 10, 9 say no, but maybe you say yes, and you might learn something from them. And that's back to exactly why, and I don't want to keep coming back to this. I make this so affordable because I want people that really need it can afford it. The coaching, I throw it in. Even after that, it's $200 a month. You get 4 to 6 hours of me. I put free shit on my Facebook thing to help people, to give you a little lesson. If you can learn one little thing for free, there's a lot of free content online today. You can decipher the bullshit from the baffle, and that's a problem. There's so many courses online, there's so many coaches, it's bullshit.
Yeah, I do not know what one you gonna buy of this
Exactly.
course,
You know, and like this, ask people questions. You can decipher the bullshit from the baffle real quick, and somebody takes a course online and they're all of a sudden a certified coach for something. You know, they had success. I was talking to somebody yesterday, and some young kid, not even 20 years old, found something, scaled this e-commerce thing to like 100,000 in the first month or two. And this guy was going to do something. All of a sudden, I'm shutting my store down. I'm building a course how to teach people how to scale a company. Well, he knows shit in 2 months, right? So it's due diligence. It's back to a private equity firm buying a business, or you buying some training or hiring a coach. Do your due diligence. You know, if you use some common sense, you can decipher the bullshit from the baffle, you know, and there again, it's value. You know, like I said, people I've started, I can find, there isn't a business that isn't doing $200,000 or $300,000. I'll guarantee I'll find you 50 grand like that in your business. If it was perfect, you wouldn't want me anyways, right? But too many people charge a fortune because people are willing to pay it. And that's fine. I'm not knocking them, but it's greed. You know, and if they're starting out, but there's value out there, decipher. I don't know if that answers your question, I rant, but it pisses me off if all these people think they're coaches and experts and they haven't had no bumps in the road, they haven't had no failures to overcome them, and no real experience.
Yeah, of course.
Somebody yesterday, and I don't call myself an expert, I'm ranting here, if you put 10,000 hours into something, you're an expert or you have mastery. I did a little calculation not since I was a kid, since I started my first company at 21. I have 130 to 140,000 hours in business trenches. I've gone through a lot of shit. I've made a lot of mistakes. I've had a lot of success. Do I have all the answers? Absolutely not. And I learn something new every day. But look for that.
Thanks. By the way, I forgot. Do you do coaching? No? Do you do coaching? Like, I wanna.
Yeah. So in my course, I do. You get 2 months if you buy the course. You get 2 months worth of group coaching. So it's a Zoom call, webinar style, every week for 2 months. And then after that, if you sign up, it's only $200 a month. And then I only will take on a select few on one-on-one. And right now, I'm only charging $2,000 a month. So you get an hour a week, plus I'm working on things on the background as well. And with that, no contract. If I don't give you phenomenal value, I'll fine you 10, 20, 50, 100,000 bucks. So you can fire me if I'm not giving you value, and I can fire you as well.
Of course.
You know?
Thanks.
Because I don't bullshit. I won't work with somebody that doesn't put something into action. I'm not trying to sound arrogant on that. And same thing with you. If you think I'm blowing smoke up your ass, fire me. I don't. And so many people, we have to sign a $30,000 deal for 6 months because it's going to take that long to get results. Maybe in their case, fine. I'm not knocking them, but there's too many scammers out there, and I've been burnt by people before in those situations. Promise you the world. They have a fancy website and a bunch of fancy stuff, false testimonials or something, right? And you get caught and burnt.
Thanks.
Sorry I rant. Anything else? Thank you so much.